It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show. Thanks for joining me. Man, we've got a lot to discuss today. There's a lot of confusion going on in our real estate market right now. Not just what's happening here locally, but regionally, nationally. A lot of mismessaging out there. So we're going to break that down today. We're going to help you guys understand what's really going on in the real estate market. Help you guys try and separate fact from fiction. And this is not one of those shows or one of those clips you'll see on YouTube that's heavily edited to try and push some sort of idea that our market's about to crash by 50, 60%, or a tidal wave of foreclosures is about to hit the market. This isn't nearly that doom and gloom, but I do have some things I want to point out today. I want to help you guys understand the trajectory of the market, because that's what everybody's questioning right now is, where are we headed? Well, let's figure out where we are first, right? So we're going to talk about what's going on in our local market. We're going to talk about the fact that, we just came off of the slowest month in sales in the real estate market since the crash of 2008. We had the worst April on record since 2008. So we've got some mixed messaging with the market. Yet for those that are looking to buy a house right now, just as an example, maybe they're actively looking, they see a property hit the market, and consistently properties are still going under contract with multiple offers. And we talk about this increase in inventory, and people are reducing their prices more often, and things are taking longer to sell, but prices are going up. So it's really confusing, right? There's a lot of mixed messaging in the market right now. So we're going to break all that down for you. Before we get started, just a few little pieces of information here. For those of you that listen to this program, you know that I'm really big on data and helping you understand the real estate market. I've been selling real estate here for 20 years. I've sold about $1 billion worth of real estate, about 1,500 transactions under my belt. And I keep a really close ear to the ground, obviously, with this show, having been in existence for 13 years. I come on here week after week and really just help you guys understand not just the market itself, but the process of buying a home or selling a home or investing in real estate, given those particular market dynamics. So we have a company based out of Atlanta that provides us with really interesting housing statistics specific to our local market. These are not statistics that you can find online. You'd have to pull the data points and do the math yourself, but we've already done that for you. And so we have two separate reports that we're giving away. One is for single-family homes, one is for condos and townhomes. But it is the first quarter of this year's report for our housing market that looks at statistics in just a different way. Like, as an example, what happens if you initially overprice your house? What sort of impact does that have to your bottom line, to the time it takes for you to sell your home, to the closing costs that you might have to pay or concessions you might have to offer to a buyer if your property stays on the market for maybe longer than it should? A lot of these questions are answered in these reports, and so it gives you, frankly, a view of the market unlike really what's out there. So if you'd like to get a copy of that, just text the word report to 843-800-0065. That's 843-800-0065. Text the word report, and I'll send that over to you. If you're thinking of selling a home, selling and buying a home, maybe you're talking about looking for a new place to purchase, but you need to sell your home first. Maybe you just want to educate yourself on how to sell a home the right way, how to save money, what the process looks like when it's done correctly. We have a guide that I've personally written. It's about 50 pages long, and it helps you guys understand the process of selling a property from start to finish and the money you can save along the way or the mistakes that you might make. So self-education is incredibly important. If you want a copy of the most comprehensive home seller guide in Charleston, written by me personally, then just text the word guide to 843-800-0065. That's the word guide to 843-800-0065. So report or guide, text it to 843-800-0065. We'll send it right over. So, all right, let's get into this. So we know that April, in terms of closings, actually properties sold was the slowest it has been since 2008. It's the slowest April we've had so far. We're also seeing inventory, right? The number of homes available for sale at any given point in time continuing to go up. And so because of this shift in dynamics, a lot of companies or reporting agencies or popular websites or wherever you go to find data, a lot of them are adjusting their forecast for what they think is going to happen this year in the real estate market. A lot of folks, toward the end of last year were saying, maybe a few percentage points. 1 to 4 was basically the range. Well, now a lot of companies have come down. In fact, some are saying that prices are actually going to go down at the end of this year. So Zillow, as an example, their latest forecast indicated an increase in existing home sales and a decline in home values in 2025. Home values are projected to fall by 1.4% this year. The combination of rising inventory due in part to soft sales volume so far this spring could continue to put downward pressure on home values. And with increased supply, buyers have more options and time to decide, though they have not been as active as they typically are during this time of year. The hesitation can be attributed to economic uncertainty, which may have peaked. This is coming from Zillow. You also have Moody's, right? They're saying that prices are going to come down about 0.5% by the end of this year. Realtor.com, they haven't updated their prediction, but in the very beginning of the year, they were saying that, hey, prices are going to go up 4% this year. Well, we're not that far off. But if you look at the pace at which properties are appreciating, we could say that prices are up, 2% compared to this time last year. But as we continue to compare, May to May of last year, June to June of last year, so on and so forth, you'll start to see, I think, that percentage increase start to get smaller, right? Until we get to a point where prices are flat, which for me feels like where they are right now. And we'll get into that a little bit later on. But Realtor.com, by the way, also said that we'd have an average interest rate of 6.2% this year, which I don't see happening. And again, that's the average. So I think that we knew that the Federal Reserve didn't adjust things this May, and they're meeting on June 18th, I believe. And based on the data that's out there, there's like a 56% chance that they're going to cut the rate by 0.25%. Which doesn't necessarily mean that interest rates for single-family homes or whatever are going to come down by 0.25%, but we'll see. I think we're all waiting for some good news and some relief, financially, just based on the cost of everything. And that's part of the reason why real estate is starting to stagnate, right? It's an affordability issue. But what's interesting is if you look at it from kind of a different perspective, right? If you look at the new construction market, according to the latest National Association of Realtors Home Builders Index, it's basically a confidence meter that determines how confident builders are in their ability to achieve their profits, or the number of people that will be coming through their communities, obviously the number of properties they'll be selling, so on and so forth. So all this gets rolled up into a score that essentially determines how confident the builder is that the environment is a profitable environment for them to build homes in. Well, right now, their confidence score is a 40. So you have to think of it as like an approval rating almost. It's like 50-50 is middle of the road, right? The lower you go, the worse the outlook is. So just to add a little context to that, and by the way, in March, we were at 39. So we went from 39 to 40. Yay, we went up a point. But just to add some context, after the market crashed in 2008, it took until September of 2012 for us to reach a rating of 40. Obviously, it was below that during that time, which is what it is now. So from September of 2012 until now, we've had 153 months since then. We've only had 9 total months where builder confidence was as low or lower than it is now. Those times were April and May in the spring of 2020, which COVID, right? October of 22 until January of 23, which was when we had a big spike in interest rates. They got up to over 8%. October to December of 2023, which, there was a little gap in time there. And then the past 2 months. And that's it since September of 2012. So, Robert Dietz, who's the chief economist of the National Association of Home Builders, says that policy uncertainty is having a negative impact on home builders, making it difficult for them to accurately price homes and make critical business decisions. The April data indicates that the tariff cost effect is already taking hold, with the majority of builders reporting cost increases on materials. And then, of course, you've got layoffs that get put into that. But builders are hitting the brakes this year in response to high uncertainty for costs and future demand. We expect new housing starts to fade further over the summer as conditions remain challenging for builder profitability. And so builders are, estimating that with the changes that have taken place over the past few months, that it's looking at about $11,000 per home is the added cost that they need to take into consideration. And so you've got single-family housing starts, right? New construction permits. Those are down 14.5% month over month. They're down about 10% from this time last year, according to, Census Bureau and HED data. And so we've got a really interesting mix of information to try and draw conclusions from on what's happening on the national level. But we're going to take a quick break. I'm going to tell you what's happening here locally and how we're different. But really, how much different, right? We need to make some, we need to draw some conclusions from some of the data that we have locally, as well as the trends that I experience on a daily basis as I'm just running my real estate business here locally. So I want to really dive into that, and I want to talk about the silver lining. This is not a doom and gloom episode. This is not a go bury your head in the sand for a few years and let's just hope everything's better by the time you want to come out. We're going to talk about what we can do now to take advantage of some of these opportunities. I'm not here to say that right now is the perfect time, by the way, for you to buy a home or sell a home. In fact, for some of you, it might make sense to wait. But what are the factors that go into making that decision? We're going to talk about that when we come back. Stick around. This is the Brian Beatty Real Estate Show right here on the Big Talker 1250 WTMA and WTMA.com. I just gave you guys the lowdown on what's happening in the national real estate market. I left a few things out, but we can't talk about stats all the time on this show. It's too boring for some of you. I love them. I'm a data-driven guy, but anyways, I want to talk about what's happening locally, though, because in the grand scheme of things, yes, it's interesting to watch the national real estate market and kind of get an idea of the overall trend within it. But at the end of the day, it's a national real estate market. There's really no application to us here in our little, slice of the world in Charleston, South Carolina. So let's talk about what's happening here locally, okay? And let me just kind of paint this picture for you. In the past 6 weeks, we have seen almost 3,000 price adjustments from properties that are currently on the market. That's up about 15% compared to the 6 months prior to that. Typically, over the course of the past 6 weeks, you would expect there to be a lot of activity, a lot of buyers out looking, a lot of offers being made, trying to get under contract and then closed in the middle of summer so they can transition to another home, not disrupt school. That's the overwhelming majority of people that want to be settled by this summer are under contract right now, or they're seriously looking right now. So there's a lot of activity from a seasonal perspective in our market, which is why it's interesting that we are seeing an increase in the number of properties reducing their asking price in order to sell. So here are just a few more things to help you guys understand kind of where we are right now. In the pre-owned market, right? We're going to split this up into two markets, new construction and pre-owned homes, right? Pre-owned homes. Right now, new listings or the number of homes that have hit the market is up 20% compared to this time last year. However, the current number of homes for sale is up 50% from last year. I'm going to say that again. New listings are up 20%, but the number of homes for sale is up 50% compared to this time last year. What's happening and what I've been telling you guys is that every month we're seeing this gradual increase in overall supply, which is taking the power further and further away from sellers as we approach a normal market, as we move away from a seller's market, which is absolutely happening and has been happening for several months, if not at least a year. I mean, we've really been feeling the change for about 8-9 months. I feel like it started around August or September of last year. So in the pre-owned market, new listings are up 20%, but the number of homes for sale is up 50%. But in the new construction market, New listings are up only 1.5%, but the number of homes for sale is actually down 11%. They're actually down 20% from last fall. So a lot of new construction inventory is just gone. If you look at the closings, right, the number of properties that are actually changing hands, we're down about 3% in the pre-owned market, and we're down about 16% in the new construction market. There are 2.5 months supply of inventory in the new construction market, which is down about 14%. But we have now almost 4 months supply of inventory in the pre-owned market, which is up 48%. And so I know some of this doesn't quite make a ton of sense to you guys, but at the end of the day, what we're talking about is the balancing of supply and demand. And as you can see, or as you can tell, demand is softening and supply is increasing. What does that then tend to do to prices? Well, you would think that prices would depress. And I think to an extent they are, in that a lot of folks that are actually selling their property right now, not all, and not all. And I want to just say also really quickly that on a national basis, 27% of all homes that sell get more than their ask. They sell for above asking price, which is still incredible. But you would think that prices would start coming down. What's happening really in the grand scheme of things is that sellers are basically getting what their neighbor got last month. There's not been a lot of, we talk about leapfrog pricing on this show a lot. I feel like I'm overusing it at this point every time I say it. But the days of listing your property for 5-10% more than the home that's just like yours that just sold, it's not working. It's not working in this market. So prices are fairly flat. It's also taking 40% longer to sell a pre-owned home. It's taking about 70% longer to sell a new construction home. And on top of all of that, on top of all this information, right, 1 in 4 homes are failing to sell. When they hit the market, 24 out of every 100 homes come off the market, either because the seller chooses not to sell, or they have to fire their agent and hire somebody else, or something has changed, or they've decided to rent the property, so on and so forth. But despite all of this, despite all these mixed signals, the median sales price is still up 2% in pre-owned homes. It's up 3% in new construction. And so when I say that the market is a little confusing right now, that's why, is because some of the data points don't clearly point toward one direction over the other. It's not like the data points and the trend lines very clearly show us headed toward a seller's market, which I think a lot of people would hope is the case, but it's just not. The stats are in favor of the buyer right now. And to be honest, buyers have been waiting, a decade for some good news that they can use to try and negotiate with the seller. Well, for 10 years or so, we've been in a seller's market. We've been in an appreciating market that's appreciated more than inflation. And so, sellers have held a lot of power because there haven't been very few options. So we talk about, where's the silver lining? What do we do with this information? Because a lot of people want to move, have the ability to move. It makes sense for them to move, but they're scared. And fear sets in, and it causes them to straddle the fence and just wait. And a lot of folks also want to try and time the market. All those things make sense, right? It's natural to feel that way. I think that there are some great opportunities out there. When I talk about where the silver lining is in everything right now, I mentioned a few different things, and we'll dig into this in just a little bit on this show. First is the difference between borrowing power and bargaining power, right? Interest rates are high. They're going to be high for a while. High in comparison to where they were. If we take, a 7% interest rate over the course of the past 50 years, I don't think many people would say 7 is high. I'd say it's normal, right? But the price of homes is not normal in relation to the amount of income we have, especially when you look at how far the dollar goes these days in comparison to everything else that has increased in cost, right? So the dollar's just not going as far as a lot of us want it to. And obviously that has an impact on affordability, right? We're at a point right now where we, as a Charleston metro area, only make about 74% of the income necessary to afford the median priced home in our market. And that's from something called an affordability index, where it says, hey, here's the income, here's the cost associated with purchasing the median priced home in your area with an average interest rate and 20% down. And that's the kicker. And that's why, when you dig into this data, sometimes it's frankly a lot worse than it actually looks. But if we're assuming 20% down, then that means the person that has less than that, 10, 5, 3.5, maybe you're a VA buyer. Well, that means that the affordability is even worse for those folks that aren't putting down as much cash. So the borrowing power in the grand scheme of things isn't great. But as more and more properties hit the market, as you as a buyer have more options, and ultimately as you have the ability to go to a seller and say, hey, here's my offer and I want a good deal. And if I can't get one, then there's 3 others that are kind of like yours that I'll go to them and I'll see if they want to play ball. The more and more sellers get into that type of situation, the more the market's going to change. The more power those buyers are going to get, because that then becomes the norm. And at the end of the day, everything that's sold is a recorded sale. When we look at comparable data and we're sitting down with a seller and we're saying, well, yeah, this home, I was just doing this. There was a home that sold for $1,275,000. And I was looking at the data and they're like, well, yeah, they almost got $1.3 million for their house. It's like, well, actually, here's what you don't get to see. In the MLS, I have something called agent notes. That's only for other real estate agents because the MLS is a realtor-based membership site and platform. That seller paid $75,000 in concessions to the buyer at closing. So it wasn't almost 1.3, it was 1.2. And it took half a year to get that. And they started at 1.5. And so it's like you start really digging into this data and you help people understand that there is a very clear difference between the ones that are marketed well, priced well, and those that sell quickly versus those that take the, I'm not going to say, I guess I can say just the lazy approach, right? We're going to take some photos, probably use our iPhone because the photos are pretty good on them these days. We'll stick it on the MLS. It'll go on all these websites. And, honestly, if we're not getting showings, then let's just reduce the price. It's like a very lazy way of marketing a home for sale. Most sellers want their agent to go above and beyond and find buyers for them, not just take an hour with set it and forget it, mentalities and just kick up their feet and wait for the phone to ring. That was 2020, 2021. That's not now. It's a lot harder to sell a home, or it requires more skill and it requires, a certain, in my mind, amount of experience and strategy in order to get out of this transaction what you ultimately want. Which is why another silver lining is that home sale contingencies are coming back. Sellers are more open to giving you time to get your home on the market and sell it. So we're going to talk about that too. We'll talk a little bit about the fact that the good ones are still going quickly, right? So how do you as a seller get your unfair share of attention? Investor opportunities are starting to come out as folks are just in distressed financial situations. Not to say that we're here to take advantage. We're here to offer solutions for folks. And then you can also start to see some of the micro trends in our market really start to develop, and they're easier to identify. Different markets behave differently, and obviously we have a bunch of different types of markets here in the Charleston area. So it makes it easier to identify opportunity zones. Where is development going? Where would it might make sense for me to, invest some of my money into the long-term play of Charleston and Charleston's growth. Maybe there are individual opportunities for me to buy something at a really good deal now, fix it up, sell it for profit, or increase the amount that I could rent it for and it turn into a really nice cash flowing investment for me because the stock market's too volatile or for whatever reason you decide to get into investment real estate. And then the last thing I would say is that although this can be viewed as a silver lining, it's kind of a double-edged sword in that we're really on kind of like the tail end of a seller's market. The seller has some benefit because we're still technically in a seller's market, but it's shifting toward a normal market. And usually when you see shifts in power like this, things tend to bounce. In other words, we're going to see a little bit more of an aggressive reaction out of the buyers, at least in the short term, in terms of their behaviors and what they feel they can get out of the deal, and whether sellers, more often than not, are willing to go with those requests from that buyer. Because once we have a few of those sales recorded, especially in a specific neighborhood, that then becomes the norm. That's the new comp environment for that neighborhood. So if you're a seller, you still have some benefit because it's still a seller's market, and you get to benefit from maybe going and finding a seller to purchase a home from that's in a bit of a tough spot. They're in a bit of a bind. They need to sell now, or they've been on the market for a while and it's just not selling. Maybe they have taken the lazy approach in selling their home. Maybe they haven't fixed their home up. Maybe they're getting penalized for that by being on the market longer. Maybe that's an opportunity for you as a buyer, right? So there's some silver lining. It's just, how do we take this information and use it to our advantage? So we're going to pick that apart a little bit. We'll talk more about that as the show continues right here on the Big Talker 1250 WTMA and WTMA.com. Just a quick reminder that if you want a copy of the first quarter breakdown of the Charleston real estate market from this market statistician we've hired, the data in there is really, I love it. It's unique. It's unlike what you can get anywhere else. So if you want a copy of that report, text the word report to 843-800-0065. That's 843-800-0065. And if you want a copy of our home seller guide, the most comprehensive home seller guide in Charleston, then text the word guide to 843-800-0065. I always like to take a moment and just say thank you to those of you that listen to this program. I really do appreciate it. For those of you that have called and allowed me the opportunity to earn your business, thank you very much for that as well. We're here to educate and to entertain, and if at the end of the day we can help you with your real estate needs, then that's fantastic too. So if we can help you with anything, you're thinking of buying, selling, investing, you have a property you'd like for us to manage for you. Maybe you want access to short-term capital because you're a real estate investor. We've got a real estate team, a property management team, and a private money lending company that we can offer all under one roof. So if you'd like more information on any of that or some of the incentives that we're offering right now, like reductions in commissions on certain plans, or buying and selling a home in the same area will pay your moving expenses, easy exit guarantees, all that great stuff, we can have private conversations about. 843-800-0065. That's 843-800-0065. So let's dig into this a little bit, because I want to talk about home sale contingencies. For several years, if you wanted to buy a home but you needed to sell your house first, you were in for a rough go of things, because most sellers didn't want to give you the time of day. They did not want to wait for you to then go and get ready and put your home on the market and then, have showings, get an offer accepted, have the buyer go through their inspection and appraisal and termite inspection and blah, 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 and hope that at the end of the day, everything works out just fine and you sell your home and you can buy another, right? Where in most instances, especially in that market, if it's a seller's market, like their home's gonna sell. But the challenge is, because it was such a seller's market, right? Everything was such in favor of the seller that in order for a seller to take your offer with a home sale contingency, you had to make it worth their while. You had to pay more, basically. There's no easy way to put it. Most sellers wanted a premium. They wanted something for the risk and the time associated with keeping their home off the market so that you can try and sell yours. Plain and simple. That's just the facts. So what has changed? Well, properties are taking longer to sell. They're taking about 40% longer to sell right now than they were this time last year. It's been a weird start to the spring selling season. We're seeing inventory continue to go up, sales not keeping pace, but for some reason prices have gone up, but the rate at which they're appreciating is coming down. It's just, we're starting to see the tail end of the seller's market. As these homes continue to hit the market, as inventory increases, it takes away the power from the seller. The buyer has more options now. That's obviously one of the reasons why things are taking longer to sell, because not only that, but interest rates haven't changed, so it's not like the number of buyers out there is necessarily increasing, right? In fact, as time goes by, there's probably less and less of them out there. But that being said, when we have these little shifts in the market and things become confusing and consumer confidence is impacted as a result of that, you start to find some opportunities you might not otherwise have had, like a home sale contingency-based offer. So we're seeing a lot more of them actually work right now. We're having our own clients say they're open to it if that means they can get the price they want. So The challenge is, and this is very similar to how some buyers behave. And I'm not picking on anybody, but I'm just trying to give you some information to help you. Let's say that you're interested in buying a house and you know you're going to have to get a mortgage. Please don't wait until you find the house you want to buy to then go and apply for a mortgage, especially if you are not certain that your credit score is fantastic, unblemished, has no errors on it, nothing's on there that shouldn't be on there, and you have incredible income and low debt. If there's any question at all about any of that, then you really should speak with a lender. And the reason is, gosh, I can't tell you the number of times lenders have basically run a buyer's credit. It just sounds like such a dirty thing to say, don't run my credit, right? A lot of people are afraid of that because it will negatively impact their score, which isn't necessarily the case, by the way. But I can't tell you the number of times lenders have found things on buyers' credit reports that should not be there, that are inaccurate, that are just wrong, that negatively impact their score and could prevent somebody from buying a house. We have had people that have not been able to buy homes because there were mistakes on their credit report and they lost the opportunity to buy the house they wanted. Don't give yourself that unfortunate circumstance. Don't allow that to happen. Just have that conversation preliminarily with the lender. Allow them to just take a glance and allow them to offer some suggestions to improve your credit score or your ability to purchase the property at a better interest rate. So much like buyers that sometimes lose out on deals because they just didn't take the time to be prepared, sellers can find themselves in the same situation if you go and you find a home that you really like, and then you realize, okay, well, now I'm under the gun to hire an agent that actually really knows what they're doing and can help me accomplish this goal of selling and buying and not putting me in a position where I might have to buy 2 homes or own 2 homes or be homeless, right? So you need to find somebody that's really experienced in these types of transactions. And then you have to make sure that you can move quickly because that seller's only giving you like a few days to get your home on the market and then maybe a few weeks to get under contract and then maybe a month for you to close. You have a very finite period of time to pull this off. So if you're one of those folks that's thinking of buying a home, but you have to sell your home first, there's really just no way around it, or it doesn't make financial sense for you to buy a home, close on it, and then wait to sell your home. If that just doesn't make financial sense for you, then interview agents. Find somebody that you are comfortable working with, that really knows what they're talking about, that gives you confidence in your ability to pull this off. Go ahead and review the agreement with them. You can even hire them, right? Sign an agreement with them. And what that agent can do is something called a brokerage exclusive listing, meaning you can hire that agent and you can have them start marketing your home for sale, but they can't do any form of public, like in other words, they're not going to put your home quote unquote on the market. They're not going to put it in the MLS. They're not going to put it online on all these different websites. They're not even going to put a sign in the yard. What they are going to do is start communicating with their internal database of leads, of people that they communicate with that might be looking for a home like yours. So brokerage exclusive is amazing in that for teams like me, we've got, 30,000 people in our database that we constantly keep up with. We always have folks that are looking at properties that hit the market. And so we can communicate with those people about your property and kind of dangle this carrot of, hey, we've got something that's about to come on the market. It's not technically available yet. You won't be able to find it online, but it looks like you were looking at some properties in this area and price range. I wanted to make you aware of it. The seller's open to having a conversation about it if you are. So you go and you find a buyer. And what buyer doesn't want that kind of phone call, by the way? They always want to know about what other people can't have access to, right? Then you can be fairly strict in your price as a seller if you're doing that, because you get to say, hey, you know what? If we're going to sell this house to you, it's got to be a really, really attractive offer because you're asking us to sell it to you before we've had a chance to introduce it to the world, right? So it gives you some high ground as a seller. And the beauty in all of this is that not only am I communicating with my database, but it's called a brokerage exclusive listing for a reason, right? My brokerage has the most agents of any brokerage in the world. Like almost 200,000 agents in Keller Williams Realty. All those agents get to communicate with their database as well. So the likelihood of us finding a buyer for your house before we even put it on the market for sale is high. We can use all of that attention to basically create a line of people that are interested in your house so that by the time we hit the market, we say go and we have people waiting to see it. All those folks, in addition to all the people out there that we have not communicated with that are going to see it online and through our different marketing or whatever, are going to come and see it at the same time too. And we'll have, hopefully, right, if this all works out, an immediate rush of showings. And at the end of the day, and I've said this before, marketing is about creating urgency. It is about creating fear of loss, right? You want those buyers to think that if they don't make a quick decision, somebody else is going to, and they might lose, right? That's the kind of mentality you want to have when you're marketing a property. And when you're doing a home sale contingency, one of the concerns is that, well, what if I can't sell my home? Well, if you haven't given the agent or yourself the ability to get any form of a head start, yeah, it might be more challenging. So give yourself a little bit of a head start. Talk with interview agents, select an agent, even allow them to start doing some behind the scenes marketing so that by the time you find a home that you're really interested in, you've already got traction on the sale of your home. You already have momentum. The other thing you could do is you could actually list it for sale. And you could just put a contingency in there that says, hey, you know what? You can show my house. You can submit an offer. I will even accept it if it's, agreeable. But I need a certain amount of time to go and find the replacement property. I need 30, 45 days, whatever amount of time you can get both parties to agree to, of course. There's no standard. But you could have somebody make an offer on your house and say, yeah, I'll take your deal, but you have to give me 30 days to go and find another property and put that one under contract and get through the home inspection. And if I can do that, then I'll agree to the terms of your contract and I'll sell your home because I'll have found something else to move into. But if I can't find something in that 30-day period or whatever that amount of time is, then we're just going to terminate the deal. I'll give you your earnest money back, or we can extend it to give me more time to find something, but it gives you some more options that most agents don't even know exist, right? And I think a lot of people listening probably don't even know that home purchase contingencies are a thing, right? For some of you, you might be hearing about this for the first time. These are just two different examples of how to approach the process. There are several. So I've outlined a lot of them in my guide, The Most Comprehensive Home Seller Guide in Charleston. If you guys want a copy of that, I personally think it's a educational read, a good read. I've heard folks say the same thing, and I appreciate those nice words. But educate yourself on the process, if nothing else. But it gives you some really good data on there on how our current market is behaving and how you can use that to your advantage, even though, the market's starting to pull back a little bit. So to get a copy of that, text the word guide to 843-800-0065. Text the word guide to 843-800-0065. Or you can visit our website, listingsincharleston.com. And just remember, we put all of these radio shows on video. We put them on YouTube. We put them across all socials, the Brian Beatty team. So if you can't listen to the whole show here, you can pull up our podcast or watch our videos or be friends with us online. So we've talked about a lot today. We've talked about what's happening in the national real estate market. We've talked about our local market here and how, frankly, there's a lot of mixed messages, right? It's tough to understand exactly which direction our market is headed right now. What I can say with confidence is that we are just returning to what seems to be a normal, balanced market, right? We've been on the end of the spectrum, right, for several years in that we've been in an extreme seller's market. We've had an extreme shortage of homes for sale. Now we're just returning to a more normal market where, it's going to take a month and a half maybe to sell your house. That's normal. That's what's been normal. That's the trend line. If your home hasn't sold in a week, it doesn't mean that your home won't sell at all. It just means that there are less buyers out there, and it's going to take a little bit longer. If you have more properties you're competing with, then that's going to add to it. So we talked a little bit earlier about where's the silver lining in all of this, right? I'm not a doom and gloom guy. I don't let anything hold me down. I like competition. I was a pitcher in baseball up through, went to Little League World Series, gold medal in AAU, pitched at the College of Charleston, had a pretty cool career in sports. And I was a closer. I did well under pressure. A lot of folks are not that way, and I understand. And it feels right now like the market is under pressure. It feels like we've got this paralysis going on right now where both sides are kind of locked in. The sellers have a really low interest rate. The buyers are facing a really high interest rate. They're in an environment where things haven't really become more affordable for them yet, so maybe it makes sense to wait. Obviously, that's impacting demand, causing things to take a little longer to sell. More people are deciding to sell. So yeah, it's a confusing time, but in the grand scheme of things, I would just say it's fairly normal. How the market is behaving right now is normal. And if you're a seller and you're thinking of selling your home and buying another, what's interesting is that you actually have a pretty decent amount of advantage right now still, in that, yes, you're going to benefit from being on the tail end of a seller's market, and that there's still not a ton for sale. Yes, there are more homes hitting the market, but overall, inventory is still fairly low. And because of the changes in the market and the lack of confidence in the market, you can go and get a good deal on something that you buy. So it's like, at some point, right, the ability for a seller to get a really good deal on the home they're selling and potentially get a good deal on the home they're buying, that's going to go away. That's a fleeting moment. That those don't last for too terribly long. Could be a few months. Who knows? But if that's your position, if you're thinking of maybe selling your home and buying another, or just buying, or just selling, let's talk about the specific market that you're in, the trends or the micro trends within that market, and how we can position you to get your unfair share of attention, because there are a lot of properties out there that are not being marketed well. There are a lot of sellers out there that have not taken the time to do some extra things to their house to make it stand out from the rest. It's getting lost in the mix. It's getting buried. It's somewhere in the middle or bottom of the stack, and it's just helping the other properties that are well priced, that are in good condition and marketed well, sell faster. So if you want more information on that, 843-800-0065 is my number. Call or text me. Let's have a conversation. 843-800-0065. Listings in Charleston is our website. Y'all take care and you enjoy your weekend. Thanks for listening to the Brian Beatty Real Estate Show right here on the Big Talker, 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.